Hello, everybody. So, volatility in the 2020s decade is unrecognizable compared to what it used to be in prior decades. The Nasdaq is down 3%. Everything seems to be crashing. Pre-market's not open, so I don't have a really good map. Pre-market's open, sorry, but the main markets are not open, so I have no idea where it's going to close at, which is crazy. But it seems like everything's correlated to one, and everything's crashing, and it's a deleveraging, and a lot of people are selling a lot of stuff. Nasdaq down 3% in pre-market, as seen on Google through the QQQ. Alphabet down another 1.7%. Think about that. Alphabet was down like the most, I think, in its entire history was yesterday. Yesterday, Alphabet crashed a lot yesterday, more than 5%. And if you look at SpaceX is now below the first price you could have gotten on that IPO Friday if you were to buy it in the open market, right? So some people still got a sweet deal if you got it at 135, but SpaceX had a precipitous drop, and really it's cheaper. It's trading cheaper now than it was trading on that Friday when it went public. So the crash is pervasive, and it's very consistent with what we've always seen in this market. And this is a mad red day from what it looks like, a mad red Tuesday, and I expect that we will also have mad green days. The problem is I don't know when these are going to come. So your only job is to not get shaken out. If you invest in these stocks, don't get shaken out. That's the job. I want to note quickly, though, that for Google, I put my valuation here, the valuation of different tech stocks and what I think about them. As far as Google is concerned, I found it a little expensive. At $350, I find it still expensive. This is a stock I wouldn't be surprised if it went back to $300, at least in the way that I value stocks. I mean, we are at a 0.93. I like to see a 0.5. That's roughly fair valuation. Amazon perhaps getting into cheap territory. I see Amazon is dropping this morning. I didn't get a screenshot, but cheap territory. And then I want to talk briefly about Nvidia. See, so I don't understand. Nvidia at 202, I don't understand. They own AI. They own the market. They own the GPUs. The GPUs is the big deal. It's in my view more important than memory, because we don't know if AIs are going to evolve in a way that they need less memory or they handle memory differently. To me, Nvidia has looked cheap for months and months and months now, and it's trading at a 0.44 on EV over GP over RG in my spreadsheet for a rule of 40 of 126. So I find Nvidia to be way too cheap. I don't understand why it's down 3%, except, as they say, it is likely falling in quote-unquote sympathy, falling in sympathy with the rest of the market. It's very annoying of these stocks trade. Meta I find cheap. Meta to me is the cheapest of the Mag 7. And then again, Tesla's dropping. We don't know why. Tesla dropping likely in sympathy with SpaceX. So it's really annoying. It's correlation to one. This is yet another day of pain if you look too much at your portfolio. So maybe don't look at the portfolio today. I'm gonna try to not look too much at my portfolio today because this is just getting old. I mean, at some point this is just getting old. Summer is officially here. I think this might be time to enjoy the summer and not pay attention to Mr. Market's nonsense, because in my view, there's a lot of nonsense going on. I will point out that the black swan is not happening. The black swan is leaving the market. Oil is down. Oil is at 73. It's only a tad higher than it used to be 2 years ago. Oil is down. This is very, very good for inflation. The executive order signed the other day allows Iran oil to get back to the global market, which means that, and that's where a lot of oil flows through, and a lot of the oil now can legally flow to like everywhere from Iran. So it's very, very good news. Oil's dropping. This is supposed to be very good for inflation, and for some reason, right, if inflation comes down, monetary easing will happen. If monetary easing happens, what does that benefit? Tech stocks. Tech stocks are supposed to benefit the most from this environment. And for some reason, the market decided that everything is going to crash. And so there might be under the hood another reason why this is crashing. The SK Hynix earnings, according to Wall Street Engine here, telling us that it disappointed the market because there was a slight delay. And of course, we know Mr. Market is quarter to quarter, so there was a slight delay in one of their products. And now the market is fearful about Micron. Micron is down 10%. The market is fearful about Micron, and Micron is reporting tomorrow after market close, and so it's possible we experience new volatility now because of Micron, not because of Nvidia anymore, which is very funny. One note on Micron: I've never really covered on Micron on the channel. The reason why I don't like Micron right now is because it ran too hard, too fast. It ran too hard, too fast. This stock has been parabolic. Did nothing for years and then went parabolic. I think there's some big investor in India that used to own it for most of his career and then sold it in 2023 and then it went parabolic. So Micron went too high, too fast. But in my view, it's not that expensive of a stock. At EV over GP over RG is 0.45 in my spreadsheet. Of course, it's 1,200. I put 1,200 as a stock price because the market's not open yet as I record this. When I record this might look like more like a 0.4 on my spreadsheet. So it's not too high of a valuation. But in my view, the question about Micron is, why would I be interested in Micron when Nvidia is trading at 0.44? And when I'm probably underestimating next 12-month revenue growth on Nvidia on this one. So I think Nvidia is the cheaper one. I think Nvidia is the cheaper company here. And yeah, correlation goes to 1. This is yet one of these days where I think it's probably better to just get off the computer and close the apps and go on a walk, provided that you don't have leverage or anything like that. If you have leverage, yeah, this is a day you got to be careful. Don't get wiped out. That's your job in these markets, to not get wiped out. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.